transition over to Robert. Transition over to Robert and Monica. Let's just have an open dialogue. What's working. I know, Monica, you had some talking points you wanted to talk about. Robert, same thing. And then team, as they're having conversations, open the mic. If you have a question, drop it in the chat. If you have a question, this isn't like a lesson where we're talking to you. I just want this to be a dialogue where we're masterminding together. So what's up, Monica?
Hi guys. So today is the first day back to work since last week, to be honest. But it's kind of nice being able to take my mind off of all of, everything that's going on. And more than anything, I feel, I don't know, I almost feel guilty, like going back to normal when a lot of people are not able to. So it just really sucks. My house, which I think Gabe, you've been to that house before. Well, you've been to both of my houses. So the other house, I was living there for like 2 years. We moved out last year. We rented it out to my sister-in-law and her husband. And we live 4 minutes from each other now. So it's like literally up the block. It's not that far. But this house still means a lot to us that my sister-in-law lives in. Eventually, it's going to be my husband's parents' house because we want them living close to us as they start getting older. So we already have it all like planned out, and then eventually it'll become my kids' house. One of my kids will own that house, and then we have another one up the block that's for my other kid. So we like planned it all out. We already have both of our kids' houses purchased, and then we have our house. And so the house that my sister-in-law is renting out right now, literally like they got evacuated, and my husband and brother-in-law kept going to check on the house, and the back neighbor burned down. Three houses down, the entire block burned down. One block up, the entire left and right side burned down. We were like literally going like every day, or we were the first night, which was Tuesday night, my husband, my brother-in-law, they were going and just watering the roof, watering the grass, like hoping that it wouldn't burn. And luckily it didn't. And then like the next day it was we were having to go to make sure that nobody would break in, because now we were seeing a lot of traffic, a lot of people just coming by being nosy, and then like looters, which is why they have the armed guard now. They have not armed guard, they have the National Guard up there now. Nobody can go in. It's actually fully evacuated. They just yesterday they told us that now that the ashes are down and that it's not hot anymore, they're finding corpses in the properties. So there's going to be a lot more fatalities than they've been able to even say there was, because they weren't able to fully get in to everything, and they're finding, dead bodies, and I'm sure it's a lot of elderly people. So I say all this to say that the market will probably be changing, because some cities were completely wiped out. Altadena was completely wiped out. I don't know if you guys know much about the history. San Marino, which is connected to Pasadena, Altadena, San Marino was one of the first cities built in all of California. And Altadena and Pasadena were also one of the very, very old cities built in all of California. There's a lot of history. There was a lot of historical homes. There was a lot of homes that were protected by the state, that were completely burned down. Altadena was the very first city in all of California where they allowed Black people to purchase homes. So that area was full of a lot of African Americans that settled there because they were not allowed to purchase in other cities in California, from the cities that were developed. So it's so, so sad to see that our working communities and minorities, it was Blacks and Mexicans actually were the first ones to that was the only city that they were allowed to purchase in. So imagine being a minority and being one of the first to be able to purchase a home in California, and trying to give hope to your family, and leaving something behind for your family, and then it getting completely demolished. Then they're saying there's about $150 billion in damages, and 100 billion of it is uninsured. I don't know if you guys heard that, but 100 billion of damages are uninsured. So what does that mean for these cities that were wiped out? Altadena was completely wiped out. My listing, I don't know if you guys saw me post my listing, $2.3 million listing burned down. I mean, we were texting the day before, her house was fine. And then the next day, which was I think Wednesday, because she was asking me if we were okay. I told her, hey, our house is fine. But she's like, it's getting closer to me. And then the next day I was like, how's your house? And she was just like, it didn't make it. And I was like, oh my gosh. So it's gonna take a lot of time for people to rebuild. And then the Palisades, oh my gosh, Malibu, like holy cow, like I don't know if you guys ever went to Moon Shadows or to like any of those restaurants out there, but those were all like staples. And so what's going to happen when some people do start rebuilding and others don't? What's going to happen with the ones that can't afford it, with the ones that are just going to hold on to it, or that I mean, there's going to be a lot of probate, I'm sure, but it's just going to be land now. And if you're building on in this area where there's nothing built around it, like, are home prices even going to be worth the same price anymore? So I'm assuming that in some of those areas, prices will drop. Prices will be lower just because they have to completely rebuild everything. And who knows how fast that's going to happen. What I'm also thinking is that people are going to be relocating out of California. I think a lot of people are fed up. I think a lot of people are, I just got a call last week from a lady in Lake Elsinore, and she's like, I'm ready to sell my condo. I'm leaving to Texas. Like, I'm done with California. And then one of my agents, she just said today in our meeting, she said she has a client who's completely selling their whole portfolio. They're selling Starbucks. They're selling like, they have businesses that they just want to get rid of, and they're moving out of the state. So I think a little bit more of this will be happening. I think more people will be wanting to sell, and I think a lot of people are looking for rentals. So I think for us that are living a little bit closer to where everything happened in the IE and LA counties and San Gabriel Valley, I feel like we all, number one, need to be sensitive to the subject, because I think that's super important. And the one message that I'm getting a lot from people is like, you realtors are so annoying. And but there's a lot of us that are helping and that are truly there to like really help. There's another real actually Sunny, who we did the
I
event with.
remember him, the dinner, yeah,
Yeah,
and all that they went.
we did the event with, and Sunny was saying that um about 30 to 40% of rentals have gone up in pricing, like literally from one day to the next. And he's like, that's just terrible that you as an agent would allow that, would allow that type of price gauge or gouging, because it wasn't even like a small amount. It was like a huge amount where, like sellers are now like, oh, let's increase the price because people are going to need, properties, which is true. People do are we need more rentals than ever now to place people in homes, but there's also going to be people that are not going to be able to afford it. There's going to be people who the houses were handed down to them, so I mean, they could probably barely pay the property taxes on it now, or then, so now, I mean, even if they were to rebuild, even if insurance were to rebuild, they might not even be able to afford property taxes, just because it might have been handed down in generations and might not be someone that's making a whole bunch of money. So there's just all kinds of things that are going through my mind. I honestly can't tell what's going to happen with the market near my neighborhood. Insurance coverage for temporary rental, what does that say? I don't know, but I don't know. I don't know, Robert. I know you're pretty close too. I don't know if you have like any say on what you think might be happening. I feel like we might be at a standstill, or I feel like the market can go either way. It's either a lot of people are going to want to be moving out, or buying in the IE. I kind of feel like the IE might be like a hot market because it wasn't touched and it's still intact, and maybe people are looking for something a little bit more affordable, maybe something away from the foothills, maybe something that's away from the ocean. But I'm not sure. I don't know. I'm still like really confused on what's going to happen, but I do know that we have to offer our service, continue to offer our services. We have to continue to make a living. I have to continue to be able to, pay for my family and, pay my mortgages and work. So I can't just stop working, but I do have to be sensitive to, the fact that all of this is happening. And this is in my market. I do a lot in all of the IE, all of, LA, San Gabriel Valley. So I know it's going to affect my business. Robert, I don't know if you have some 2 cents.
Yeah. Yeah. I think, everything that happens is unfortunate. We have, our church is actually out in Pasadena where we're at off Altadena Drive. So we have church members, brothers and sisters in Christ who've lost their homes. So it is unfortunate. I think we do have to just be ready to service people. How can we be a service to those people who need the help? There's going to be people who need to move, and there's going to be people who need to rent and need to buy, and how can we be available for them? And it's not about filling our pockets with commission checks. It's about being a service, right? And that's why you guys are on this call. You guys are leaders in the industry. You guys are people that people are going to look to. And so being on this call is the first step, is being well equipped to service them. So when they do come with something, you're able to help them out and do it the right way. And if there's anybody that's going to help them, let it be us, right? Let it be the people who actually care about them. Let it be the people who know about the market, that can guide them in the right direction. Maybe buying is not the right thing. Maybe renting is right now. How can we gather resources for people to help them out in a time of need? And if they do need to buy something, hey, let it be us. And we just want to be available and be ready, and never take advantage of anybody, right, in the situation. So it's unfortunate. Kind of like Monica said, we do have to take that next step, and part of that step is being with the right team. And I think you guys are all willing and ready to help these families out. So yeah, it's unfortunate, but we're also excited for the opportunity to serve people with a big heart. So I don't really know what's going to happen in the market. I don't know, what's going to happen. We just got to be available to be a resource, and that's how I'm looking at it.
Yeah, I agree too. I think here in San Diego, some of the conversations have been that we anticipate having an influx of people moving in. It's kind of the conversation that's been circulating. So a lot of our North County cities, like Beach, Coastal, we're anticipating. Again, no one really knows. That's the conversation that's been circulating. And we're just kind of taking it day by day here in this market. I know there's a lot of people who are just kind of focusing on what they got to do. But I like the message that you guys are both spreading. Let's be sensitive to everything. Been seeing a lot of posts on social media, like poking fun, making jokes, or just like comical things about it. And I'm just going to speak openly about the topic since we're talking about it. And this is just my perspective on it. And some might share it and some might not. And I don't, when it comes to people, whether they're wealthy, they were given the money, whether they earned it and built it themselves. I saw some comments on social media about like, oh, they're wealthy, who cares? They have money and all that kind of stuff. Listen, man, people work and they build it up, whether they have a little or they have a lot, whether they've done the right moves or made the wrong moves, whatever it might be. If they've earned, if they've done it to get to that point, respect it. It doesn't matter if they lost a little or they lost a lot. The point is that people have lost something. And I want us to have an open heart and to have that type of perspective. And that's what I've been talking to my team and even my kids about. Hey, listen, if you hear things at school or at church or someone says something about something, just because they have more doesn't make them wrong or bad for doing it. They still are human beings with families who have lost things that they've built. I'm watching some of these celebrities online who, comedians and things like, who are posting and crying. And yeah, they've worked their butt off to get to where they're at. They've made sacrifices. They've excelled in their careers. They've decided to go all in on what they've done, and they've done really well at it. So let's just be sensitive to it, keep them in prayer, do what we can. Let's not add anything to it. Let's just be that person of reason, and be there to support them when we can. So with that said, thank you, Monica, and anything the team in here can do. I see you guys advocating, collecting food, donations, money, and all that stuff. And it's really cool that you guys are out there advocating and doing it. So team, make sure you guys go to Monica's page or send her a message directly. Find out how you guys can contribute financially. with I know I think you guys have a lot of food. I think I saw someone's post or Crystals or someone. I think there's like an influx of food already, so they need other resources. But just reach out to Monica. So Monica, what's the best way to get a hold of people who want to donate and give?
So what we're doing right now is we are looking for units that are available. There's actually been a lot of off-market units, people that are reaching out that have been saying like, hey, I have a back house, I have a studio, I have, an extra rental that I never rented out. So they're wanting to help. And then just placing some fire victims in those homes. So we are helping with first month's rent for those people to get into those homes. So I think, since we're in the industry and we're always talking to buyers and sellers, if you guys were to come around to anyone that is willing to rent out their spaces, even if it's short term where they want to do it for a month, place a family somewhere just so they can have time to think about what their next steps are going to be. Reach out to me, reach out to Crystal. We're both working on the same thing. We're helping place people in homes because I think that's the biggest thing that they need right now. As much as like, I'm sure you guys have seen the news, or some of you might have seen the news where there's just like tons and tons of donations. I almost feel like it's a waste because nobody can take so much stuff with them being in a shelter or being at a friend's house or family's house or relative's home. They don't have anywhere to put things, and they don't want to take too much because they don't have anywhere to put things. So the biggest thing that we're hearing is they want monetary help, gift cards, anything where they can go and get the things that they need right now. And then later on, once they're in a home, they can go out and purchase mattresses, furniture, whatever it is, because they're starting from the very beginning, but they're not going to go out and start stocking up waters and, like all these things where they don't have anywhere to put it. So yeah, if you guys do hear of any properties that are available coming up for rent, reach out to us, me or Crystal. We're helping families move into them, get a month free, get into it with no deposit, and then making sure it's the right fit for those families. And I think that's the best way to help. And then obviously if there's someone that is hungry, like there's more than enough of that going around. So if you guys do hear of any families that are hungry or they do need something, we have tons and tons and tons of clothes, toiletries, stuff like that. So you guys can just ask us and we can send it to them directly. But like I said, more than anything, it's finding placement for these families.
Love it. You guys heard it here. Reach out to Monica. Monetary donations are preferred, and we can help the families in that way. So that's really appreciated. Thank you so much. And team, if you have any comments, go ahead and drop it down below. I want to transition really quickly for the next couple of minutes on Robert. Any kind of like best strategies before we transition over to Natalie and talk about some tax things. And maybe Natalie has some insight from her perspective and her profession on this wildfire and how it might impact real estate and taxes, etc. But first, Robert, back over to you, brother. What do we got at the Cedeno Group, man? What are you guys focusing on? What's working? What's the focus for this year? Talk to us.
The focus is vision really for us, right? How do we build out a vision where other people's vision could fit in between that? So one thing that I want you guys to think about is what vision do you have for 2025? We know there's always things are going to come up in life and things are going to change. Like for me, I just had a baby, right? We have 3 kids that are under 5 years old, and the show must go on. Like we still have to go out there and produce. We still got to run a successful team. So how do we get there? Now our team is off to a hot start this year. I think we've opened up, we're at 13 escrows in the first 13 days of the year. It did help that one of our agents opened up 5 escrows in like 7 days. So she's absolutely killing it. And I think that all starts with just the belief that they can do it. Like some of these agents have come on and they weren't doing this type of production before they're on the team. And I don't think it was because of us, but it's something about the belief that they now believe in themselves, right? They believe that they're able to do it. I've been working on like the psychological part of the business, right? Where 80% of the results come from that, right? All the time that we take back and sit down and we write stuff down and we visualize it and we think about it. And I know it sounds kind of funky sometimes because I think the same, right? Like you put it out there and it's going to come. It just sounds like a whole, like, bunch of BS, but it's not. I really think about this stuff. And I write a lot of the stuff down. So what are you believing for in 2025, right? What are you thinking of? What are you putting in front of you? And that's what, those are the results you're going to be getting. So that's what I've been working on with the team, is just getting that vision within them, and also helping them believe that they could do more this year. And it's just building on that momentum. Last year, we closed a pretty good amount of business, but January we had a goose egg. We sold 0 homes in the month of January in 2024, right? And we sold 156 homes last year. So this January we had to come in with it with a whole different mindset of, it's not going to be like last year. So if last year wasn't the year that you wanted, don't let it be the same. It's totally up to you, right? It's totally up to you to put in the work, put in the time, put in the effort, and getting around the right people. Yeah, I think that's all I really got to share with you guys. Is just building on momentum. There's no secret on how to win. For us, it's social media, open houses, and SOI, right? And if you're not doing social media at a high level, get around people who are doing it at a high level. If you're not doing open houses at the high level, get around somebody who's doing open houses at a high level. It's really that simple, guys. So I'll open it up to you guys if you guys have any questions about what we're doing. And we're an open book, and we always have been. So.
Yep. Appreciate that, Robert. Thank you for making it quick and simple. But if you guys have any questions, send them a message right now. Make it, have your question, open it up, or drop it in the chat below. I'll make it 2-minute version of what we got going on over here. Exactly what Robert said. I think focus and intentionality, being very clear on what it is that we want to accomplish. So I was joking with Monica, and I told her that last year was the only year out of my 10-year career that I did not business plan. And I didn't do a business plan. I didn't do a vision board. I didn't set any goals. And I felt it in my personal business. I was like, damn, that's the last time I ever do that. The way that I look at goal setting, business planning, vision board is the same way I look at commuting to a showing, a listing, a vacation. In scriptures, in the Bible, it says, does a man not count the cost before he builds a house? Same thing with your listing appointments and everything else. Do you not prepare and get the address and put it in the GPS before you leave your home? Of course you do. Otherwise, we just end up going in our car last minute, driving around, hopefully aimlessly, looking for our destination. Very rarely, I don't know anyone that is a high performer that gets into their car not knowing where they're going and how to get there. And yet most of us in business do that with our life. We don't, I didn't do that last year, and I felt it. So this year is super intentional about being focused. We got very structured on what we call GSA. It's our goal. What do we want to accomplish? And so, for example, I have my goal. Let me give you guys a sneak peek of the vision board really fast. We're pretty excited about it. So here's the vision board for the year. I'll give you guys a little sneak peek. Here we go. Ready? 1, 2. Oh, you already see it. Never mind. All right. 1, 2, and 3. I can't get this thing to center, but here we go. All right. 1, 2, and 3. There's my sneak peek of the vision board. And I attached, so G is the goal, S is the strategy. How are you going to get there? What are you going to do step by step? One thing that I learned early in my career is that as a real estate agent, I didn't like having a schedule. I didn't like people telling me what to do, when to do it. That was the whole reason I got into real estate. I want to do when I wanted to do it. But I learned if I wanted to perform at a very high level in different areas, in my fitness, in my faith, in my family, with my wife, with my children, with my sales team, with Winner Circle, with the things that I want to do. I like playing poker. I like playing video games. I like, there's certain things that I like to do on my own downtime. How do I have time for all of it? Well, it's with the strategy. So what's your goal? What's the strategy? Making sure that you're putting that in your calendar every day and then going out there and accomplishing it, taking massive amounts of action. And that's what the team and I did this year. We sat down collectively. We came up with what our goals were, our sales goals, our numbers. And listen, number one sounds nice, being number one all the time. There's a humongous amount of sacrifice that comes with being number one. And sometimes you have to figure out, do you want to have that sacrifice? Less time with kids, less time with fitness, less time with spirituality. You have to give something up if you want to get something. And that's something that I learned a long time ago in business. So we counted the cost, we figured out what that was going to be. And just to give you guys perspective on my business, I'm only going for 2 buckets. It's SOI, so past clients, family, friends, that, and social media. Those are the only two things I'm doing. I'm not door knocking. I'm not hosting open houses. I'm not cold calling. I'm doing social media and I'm talking to my past clients, friends, and family. Those are the two things I want to do. And I want to run a really high level business this year, just focusing on those two. The strategy was completed, and now every single day is just a matter of taking action. So with that, if you guys have any questions, go ahead and send me a message or reach out. Miss Natalie, thank you for being so patient. I want to do a quick formal introduction, and if you want to share your screen, go ahead. Natalie Elser, she's a CPA. I told you guys earlier at the beginning of the conversation, she is a beast when it comes to business. The amount of agencies she's acquiring, the amount of growth her company's having year over year is exploding. I mean, she's opening up, I think she just brought on, I don't know, Natalie, is it a Chinese division? Or so you guys you brought in someone who speaks Mandarin?
Yeah,
You
we've
have a
got
Spanish,
Chinese and Vietnamese.
of Chinese, Vietnamese, Spanish, English. I mean, she is just a young business mogul, and she is dominating. And you're in what area? Is it Beaumont or?
I'm in Irvine, but we got offices
Irvine.
everywhere now. They're all over the place. So we got San Diego, we got LA, we got Orange County, we've got in the Bay Area. So they're everywhere. Yeah.
Okay, so ladies and gentlemen, if you guys need a referral for a CPA, this is Natalie, and she's going to talk to us about taxes and reach out to her. 100% of my clients get referred over to Natalie. I move my entire business over to Natalie. She manages all my taxes now, and she's starting my bookkeeping this year. So it's someone that I've used, my clients use, and they love her. So Natalie, what do we got for us today?
Thank you very much. I am going to share my screen because I do actually have a slideshow. So I will share that.
Shari, do we give her? There we go.
There we go. Can you guys see it? Okay.
Yes.
So today's is, I mean, because you guys are realtors, so today's topic is basically help your clients to make more sales for yourselves. I know as, you know, realtors, there's only so much that you can tell your clients, you know, with tax strategies that keep you, you know, so you don't get in trouble with the board or anything. So I'm going to give you today what you can tell your clients without getting you in any trouble. And anything past that, obviously, you would need to have your client reach out to a CPA. So a little bit of my background, I think you gave for that introduction, but so I have 20 years of accounting experience, public accounting experience, I should say. I got my bachelor's from UC Riverside. I own California Professional Accountants Group, and I specialize in tax prep and planning and real estate planning and sales. So a ton of our clients own real estate in some regard, and we also are very heavy in construction as well. The top 10 tax and financial reasons to invest in real estate. So number one is the biggest one, which is for your homeowners. That's the Section 121 homeowners exclusion on capital gains, which allows an individual to write up to $250,000 on capital gains on their personal residence, or $500,000 if they are married filing joint. And of course, that is if they lived in the home for at least 2 of the last 5 years previous to selling the home. Many real estate investments are subject to preferential capital gains tax treatment, which means you actually get a preferred rate when you go to sell any type of real estate, whether that be commercial or residential. You can actually get a lowered Fed rate when you hold the real estate investment long term. You have the ability to write off mortgage interest and property taxes on your personal residence and rental properties. Owning rental properties is one way to own and operate your business without being subject to self-employment tax. So as you guys are realtors, you all know, you all own your own businesses, so you understand self-employment tax or putting yourself on wages, and you have that additional Medicare and Social Security tax. This is a way for somebody who has, you know, a W-2 regular job, maybe they don't own a business, they can essentially run their own little side hustle business without it having that additional Social Security and Medicare tax. They can depreciate the cost of rental property over time. They can even defer taxes with a 1031 exchange. Investing in real estate really helps protect against inflation. There's general wealth with tax basis advantages having to do when, you know, property passes down from one person to another. Helps create a steady cash flow if they're renting out the properties. And they can write off all the rental property expenses, including their tax prep fees. The tax code, it's really, really been written in favor of business owners and real estate investors. I mean, pretty much anytime you see a tax law change, it really has to do with, you know, businesses saving money in some regard and real estate investors saving money in some regard. Of course, there's other credits that come across in a lot of those bills, but this is really where the majority of it comes through. Businesses and rental property owners can take many tax deductions that your everyday employee can't. You know, employees cannot write off their gas to and from work. They can't write off their cell phone bills. They're, you know, anything that they're using for work that their employer isn't reimbursing them for, they can't really write those off. You know, if they own real estate, they can write a lot of those expenses off. Travel, meals, cell phone costs, the utilities, payroll if they have somebody on payroll that's running the property, retirement plans, health insurance, business property rent, home office, loan interest, auto deductions, etc. A lot of those can be ran through real estate investment. It all depends on how you are investing in that real estate and how active the properties are. But these are some things that can be written off. Many similar costs can be taken if you just own a couple of rental properties or even say just one large commercial property. For example, I have a client, they own a very, very high-end medical facility that it is not actually passive, it's actually an active income investment. So they are actually able to write off their health insurance, retirement plans, and they even have put their children on payroll through that entity. So they're able to take a lot of deductions that they weren't able to before. Essentially, if you own a rental property, you own a business. So it's important for your clients to think like a business owner. So the first tax advantage we were talking about earlier, the Section 121 homeowners exclusion. I'm sure most of you are aware, but it allows you to exclude a gain on sale of your personal residence from taxable income. So if you live in the property for at least 2 of the previous 5 years and you're single, you can take $250,000 of that gain off, and it's completely tax-free, and that is both for Fed and state. And $500,000 for married filing joint from your taxable income, which is obviously, you go for it.
That 250,000 that, let's just say, just in case some of the newer agents. So just an example. So if someone buys a condo for 250,000, they sell it for 550,000, so 300,000. Let's just say 50K goes into commissions and fees. So they're left over with 250,000 that they made. Yes. In this example that you're talking about, you're saying if they're single, that 250,000 is tax free, so they don't have to pay taxes on it. Does that affect their I don't know in the tax world how it's stated, but does that go towards their income that they made for that year?
No, it's completely tax free.
So it's not income. It's
nope. You can report it on the tax return, but you show it as completely tax free because you report it as it's excluded from taxable income because you lived in there 2 of the last 5 years.
Got it. So it wouldn't bump them up in a higher tax bracket or anything like that.
Correct. It does not bump them up in a higher tax bracket. They
see
where they're at. Yes. And then anything above that is taxed, and it is at a long-term rate. So that does depend on their other income as far as to what the capital gains rate is for anything above that amount that was excluded.
Okay. Thank you.
No problem. Capital gains, for anyone who doesn't know what it is when you sell an asset for a profit, it is called a capital gain. The reverse is also true. So if you sell an asset for a loss, it is called a capital loss. Almost all capital gains are taxable. There are some exceptions. And for tax purposes, capital gains are treated differently depending on the type of property being sold. So that depends on whether or not you're investing in gold, whether or not you're investing in real estate, whether or not you're investing in the stock market. So how those gains are treated is all different depending on what you're investing in. There are 2 types of capital gains taxes, that's short-term and long-term. So the long-term is the one that I was talking about earlier there with Gabe's question. So anything in excess of a year that you have owned is subject to long-term capital gains rates. which is at a preferential rate for federal purposes. California does not conform. Unfortunately, whatever your tax rate is for California is just is what it is. But for Fed purposes, you know, you can have a capital gain, and if you have no other income for the year, you could be taxed at 0%. It all depends on what your other income looks like and the size of the capital gain that's being taken into place. Short-term capital gains are anything that you hold less than a year, and that is subject to your ordinary income rate. So you will see a lot of people that, you know, live in a home or have a rental property, and they're coming up close on that year. And I was seeing that a lot between 2020 and 2024, because a lot of people were flipping houses or getting into houses that they just weren't happy with just for the sake of buying. Because they kept thinking, you know, if I don't buy now, I'll never be able to buy. So they were, especially one client I saw, he came in, he had owned his house, I want to say about 10 months. And he was like, what if I sell tomorrow? Like, what's going to happen? And I was like, well, anything that you gain on this property is going to be subject to your ordinary rate. If you can just sit there for 2 more months, we were actually going to be able to wipe out his entire capital gain for Fed purposes, and he was going to be taxed at 0%, which was awesome. He did decide to wait those 2 months. I think it was like 2 months, 5 days. And he actually didn't owe any Fed tax on the gain. So as you can see, the long-term rate is anywhere between 0 and 20%. So for higher income earners that are at 37% tax bracket for Fed, obviously, if you're falling into 0 to 20% tax rate for a capital gain, that's much more preferential as opposed to the 37%. They're saving a ton in tax there. The tax advantage number 2. So we were talking about rental properties earlier. This is huge. You know, getting people to invest in real estate and really seeing the value in it. Depreciation. So a lot of people are actually unaware that they can depreciate the property over time and write that off. I talk to new clients almost every day, and they think that their cash flow is actually their taxable income. And I always have to educate them and remind them that they actually get to depreciate the property over time. So that expense usually offsets, especially in the beginning years, any taxable income that they may have, and almost always knocks it down to 0 or even a loss that they get to take to offset their other income. Other common expenses are, you know, any advertising that they have. There's professional services such as accountants or attorneys. If they need to put that property into a trust, you know, they can write off the expense for the attorney that they're using for that. Any advertising, cell phone costs, computer costs that they need in order to run that rental property. There's a lot of expenses out there that clients don't think of that they can actually use as write-offs now that they own a rental. There are repairs and improvements, travel expense. I have a lot of clients that own a lot of out-of-state real estate right now, a lot of rental properties. I see the hot place that's been going on recently, believe it or not, is Alabama. But their travel to get out there, they can write that off. If they're going to check on that rental property or do any repairs or maintenance to it, they can write off the airplane ticket and a couple of nights of the hotel expense out there. I don't know how many people are really traveling to Alabama for fun, but you know, it is available. You know, hopefully you own a rental property somewhere more exciting. And then the mortgage interest, of course. So this is really important. I think a lot of people can look at debt very negatively when they are borrowing on properties. But I think the most important things for people to understand is they can write off that mortgage interest and continue to borrow on properties in order to purchase other ones. And I think that that's something important for people to understand. The sale of a rental property is a little bit different. There is no homeowner's exclusion. So there's no $250,000 exclusion or $500,000 exclusion unless they have lived in that property, you know, for 2 of the last 5 years. So a homeowner can live in a property and then rent it out, or vice versa, be renting out a property and then move into the property and get that homeowner's exclusion. You have to do a really good job on planning with this, but you can do it where you actually own a rental property, and then if you decide you want to sell it, go move into it for a couple of years and actually get an exclusion on it. The 1031 exchange. So again, these picked back up the last 4 to 5 years because of the increase in value of properties. So 1031 exchange is pretty simple. You got to exchange one business property for another. And a rental property is considered a business property, whether or not it's commercial or residential. And what you can do is, say you want to sell a rental property, you've owned it for many years, and you really do not want to pay the tax on the capital gain. You can take that same property and exchange it for something else, and you can defer the capital gains on that first property into the second one and wait to pay the capital gains until the second one is sold. Now, there is a couple of terms that we like to use. Number one is swap till you drop, which sounds morbid, but that's because it is. Basically, you want to swap properties until you pass away, because your kids or whoever is inheriting those properties will get a step up in basis on the day that you pass and the day that they inherit that property. And basically, the gain that was deferred into those new properties completely goes away. And again, that has to be an actual physical property. So you used to be able to trade in like vehicles and do a 1031 exchange that way if they were used for business. You can't do that anymore. It has to be real property. But you can exchange out of state. So if somebody wants to exchange a property here in California, it can be exchanged for one or multiple properties that are out of state. And if you're exchanging a residential property for a commercial property, that can also be done, or vice versa. It doesn't have to be commercial for commercial or residential for residential. So I don't doubt, speaking about the LA fires, that we may see some of these occurring over the next year or two.
Natalie, can you just really quickly touch on what the step up in basis means? So I heard you talk.
Sure.
What is that exactly?
So the step up in basis is whenever you own a property and you pass away, you get a step up in basis to that fair market value, or whoever inherited gets a step up in basis to the fair market value. So for example, I buy a property today, it's 2025, and let's just say it's $1 million. And I decide to leave it to my kids when I pass away, which hopefully is a long time from now, but who knows? But let's just say it's 40 years from now. So 40 years from now, that same property is worth $10 million. Well, the day that I pass, my kids now get a basis in that home of $10 million. So if they decide to sell it 5 days after I pass, the basis and they sell it is $10 million. So let's say they sell it for $10 million, $1, their gain on the property is $1. It's not 9. It doesn't come off of what I paid for it.
So is this a correct interpretation? So the way I'm just going to replace, so the word I'm thinking in my head is like resetting. So they get, that basis at which the first family bought it, that was their starting point. Now, when it's inherited by the family, the kids, it's reset. So now my starting point is 10 million. So anything above that, up to 250,000 if I live there, or actually, would that same tax law apply? So let's just say your scenario. I'm a child, I inherited the property, it's 10 million. That's I get the step up in basis. If I sell it in 2 years from now, and let's just say up to 250,000, more than likely a property at 10 million will appreciate way more than 250,000. But let's just say it's only 250,000 at that point. Am I, from where my parents bought it a long time ago at $1 million, that whole 10 million, is that all mine, or how does that work?
You're correct. Yeah. So you would be able to take the homeowner's exclusion with that on top of the step up in basis. So you can move into it for a couple of years and then take the homeowner's exclusion on top of that. And the same thing happens spouse to spouse. So a lot of times we'll see one spouse pass way before another one. And that spouse who basically inherits your half of the property gets a step up in basis to the fair market value as well. And if they are to stay in that property for another couple of years, they can, you know, use the homeowner's exclusion as well.
What about ownership? How should the vesting take place? Is that, I mean, should ownership be held like in a trust at that point, or does it not matter? Or how does that work?
So usually trust is the most common, like if you have a family or living trust, trusts are very, very important planning tool. It all depends on what the property's use is. Usually if it's a family home, it's going to go into a trust. With some more complex tax planning issues, sometimes it can go into an LLC. But the same with rental properties, those can go into LLCs, or some of them will just go straight into living trust. It depends on all your assets, and the attorneys have to do like an analytical thing as far as like how much exposure that you have personally, and also what your families and your business goals are for the future. And they can help you strategize accordingly, but the trust is what helps you avoid probate. So, I think Monica was talking about some probate issues earlier when she was talking about the fires. The trust would help with some of those probate issues. So it helps keep things out of court.
Got it. So specifically in the scenario that you were talking about, where the family inherits the property, are they inheriting it? How would they be inheriting it? So is it just, hey, I'm passing away, I'm transferring ownership from, you know, we're getting a notary and we're changing title from my name to your name, or what does that look like in the scenario that you were talking about?
Yes, so you do have to transfer ownership. You have to update the trust when a person passes away. Usually when it's a couple and a spouse is passing away, usually that trust will go from the two spouses over to the one. So, you know, but the attorneys do have to take the lead on that and get all those transferred for you and help walk you through that process. If it's children who are inheriting it, it depends on how the trust is set up and what property is in it. Sometimes a trust tax return is required for a while, which reports the income and expenses through the trust. But it all depends on what you're doing with that property right afterwards and what the trust states. Every trust has different wording, just according to what people want. I've seen it all. I've seen very unique wording in trusts, and some people inheriting things that they didn't know they were inheriting, and other people assuming they were inheriting something that they didn't. So it all just depends on how the trust is written. So everyone has to be read very thoroughly.
Got it.
Yeah.
Thank you.
No problem. So just a couple of things that you guys need to know about the 1031s to help your clients out. There is a 45-day rule. So the property needs, a replacement property needs to be identified within 45 days of choosing to exchange the initial property. The entire exchange must be completed within 180 days from the closing of the old property, which is 6 months. So that is quite a significant amount of time. And the most important thing is the seller cannot touch the cash. It needs to go through an exchange intermediary and let them handle the funds. Believe it or not, I did have one client years ago completely botch this, and she touched the cash, and she just said the wrong information to her realtors. It was really bad, and it was a huge property. So that's just my biggest thing. Do not let your clients touch the cash. These are one of the best tax strategies that I like to use as a 1031. I've helped many clients actually find their retirement homes this way in other states. Especially it's one of the best retirement planning tools I think I've used, where they were able to sell their properties here, like rental properties and stuff here, exchange them for properties outside of the state, utilize them as rental properties for a while, and then sell their main residence here in California, make a ton of money off of it, go live in the rental property in the other state, and basically live off of their the money that they made here on their residence in California. This one I'm not going to go into too much detail, but there are energy tax credits when you own a rental property or with your personal residence. So the Biden administration really actually put in a lot more renewable energy credits into the tax system this last couple of years. Commercial real estate. I know this hasn't been too hot the last few years, but I still encourage my business owners that if they are still renting offices, warehouses, construction companies that have to have yards for their equipment, that they are better off owning that property themselves and renting it back to themselves rather than making somebody else rich. And it's a good tool for even when they go to sell their businesses in the future. And this is important, as long as they hold that property outside of their company, which I encourage people to do, they can actually sit there and rent that property back to the new business owner, which is a great way to get cash flow for them in the future and also have a second retirement income stream.
That's what McDonald's did. Well, the guy that
Yes, exactly. There's a power in ownership. There's nothing like holding investments. It's what creates cash flow. It's what creates surety in uncertain times for people. I always tell everyone, nobody got super rich just by having a W-2 job. I mean, I'm sure there's a few people out there that maybe work at SpaceX or something that are pretty wealthy, but for the most part, most of the people out there that are extremely wealthy, they've invested their money, they have investments, they have some sort of business. It's not by their everyday W-2 job, just being a slave to someone. It's really holding their future in their own hands. And this is just me and my team, well, some of my team, I should say. And that's how you can get a hold of me. I'm always at the main office in Irvine. I rarely go to our other offices, but that's just because Zoom is so handy now. But if you would like to get a hold of me, we're on LinkedIn, I'm on Instagram, TikTok, that's our phone number there. You guys are all welcome, since you guys are affiliated with Gabe. If you would like to do, a free 15-minute consultation with me, you're more than welcome to give our office a call and get on the books. And I hope this helps you guys make more sales this year. So I hope it gives you some tools to work with your clients.
you guys drop some emojis down in the chat below for Miss Natalie and taking the time to put the slide together and present it. So just show some Natalie some love. And Miss Natalie, would it be okay if I know I'm gonna get this request a little later for the slides to share it with the team? Is that available, or do you want it to?
Yeah, I can share. I can send the slides over to you, and you can share them with whoever you'd like.
Awesome, thank you for that. And you guys, if you, I'll make sure to drop her contact information one more time inside of the WhatsApp chat. So if you guys have any questions for her, if you didn't get a chance to screenshot it, go ahead and do it. So super helpful there. Natalie, as always, thanks again.
Yeah,
and Monica, thank you, of course. And then team, let's turn your cameras on. Let's take a quick photo before we all leave. I thank you guys for staying with us the 15 minutes over time. Well, let's get everyone's cameras on really fast. Let's take a quick little photo before we hop off. Let me change the view of my thing. Here we go, gallery. Okay. All right, give me everyone a quick little second. I can actually fit everyone in one screen, which is awesome. I have my large screen today. All right, here you go. Ready? 1, 2, and 3. Got it. All right, team. Have a productive day. Go dominate. God bless you guys. We'll see you guys later. Bye, everyone.